Hello, everyone. Thank you for joining us for this event, Cutting Down the Low-Hanging Fruit, Financing Methane Abatement. My name is Olivia Azadigan. I am the Energy Transition Director at the Clean Air Task Force, and I'm delighted to welcome you to this panel. Thank you so much to our distinguished speakers for joining us, and thank you so much to the Atlantic Council for hosting us for this event. I'm honoured to be here to moderate this panel, but before we get started, I just wanted to give some opening remarks and some perspectives on who I'm working for, which is an environmental group called the Clean Air Task Force. We are a group of climate experts who have been working tirelessly to expand the toolkit and expand the thinking around what are the energy technologies and solutions that are required in order to us to get to a net zero high energy planet at an affordable cost. Our conclusions and our analysis has led us to believe that we have no other option but to push for all options and unlock the policy and private sector drivers that are going to get us to bend the emissions curve, which is what we're all here for. And that's why we're really excited to be here at COP28 in the region, where we're seeing some unprecedented commitments and announcements around some of these solution sets and technology, and this panel on methane. Leading climate scientists and modelers have found that reducing methane pollution is the best way that we have to, the fastest, lowest hanging fruit that we have to shave off about 0.5 degrees of the global warming that the world is going to experience. And this is a critical time frame that we need to avoid the irreversible climate tipping points. Well, everything we've heard announced over the past few days of COP28 in regards to methane abatement is worthy of celebration. We need to pause and reflect that we actually now need to take these pledges and turn them into projects. That's going to require financing and the actual building out of projects and the delivery of the emissions reductions. And we're seeking to do this in a short time frame, and what we'd like to do is, with this conversation today, is get the panelists' perspectives on what we look for next year, where we can see some of these announcements turning into project emissions and into actions. So the Global Decarbonisation Alliance is an example of that. That has been huge. 30 to 40% of oil producers have signed up to manage in Scope 1 and 2. And we've seen more countries joining the Global Methane Pledge, taking total participation now to 155 governments. So this panel is especially fitting for this, since we're going to need banks and investors to prioritize methane projects, and we need to see the financiers helping push clients now to take action. We're going to need to see philanthropy continuing to build the funding base that will support mitigation projects, the research of new solutions through civil society groups that can help drive that change and continue to hold to account. And we need the companies to make mitigation part of their culture for the whole of their organization, from the top to the bottom, so that it is an integral way of how we do business. And with that, I'd like to introduce my panelists. John Stockhouse, Senior Vice President, Office of the CEO at RBC. Welcome. Greg Chernow, Managing Director and Portfolio Manager at PIMCO, and Mark Davis, Chief Executive Officer at Captero. So with everything we've heard announced here, I'd like to first turn to Greg to get your reflections. Obviously, COP28 is worthy of celebration with the commitments we've seen on methane for Scope 1 and 2 emissions, with 40% of the world's supply, but we need to focus on implementing these targets and also focus on what's next. So I wondered, from your perspective, what's the role of the private sector with supporting these commitments, and how has the progress that's been made at COP going to help with the financing of these commitments?
Thank you for having me on this panel. I think it's pretty clear that the commitments made today are a first step. We need to multiply them. If you look at the commitment to the trust of $275 million is good. But if you look at just the emerging markets and frontier markets, they need 17 to 20 billion. If you look by 2030, if you look at the global estimate for methane, it's 75 to 100 billion. And we were on a panel yesterday where one of the major oil companies were talking about cost inflation. So maybe that isn't the number, and it could be meaningfully higher. So one thing that is obvious is that we need to figure out and multiply it. And we need to bring in private capital in order to do so, particularly the debt capital markets. Now, the problem is the disparate nature of a lot of the stakeholders need to be brought together so that we can create a verifiable, credible, and durable way of measuring and providing security to investors that they're actually accomplishing what they want. Now, I'm sure Mark will talk about the technologies and what's feasible and just how many projects could move forward with the incentives in place and information known. But we really do need to bring the stakeholders ranging from civil society to asset holders to asset allocators. Those were the original source of the money. Regulators, governments to the table. And then we can bring the bank issuers, the banks and the issuers together as well once it is pretty clear what will mobilize the money and what the policy and regulatory framework is for that. That's a lot of work that needs to get done because until there's clarity on those points, it's tough to make the capital begin to mobilize. So while we are encouraged that we're making commitments, it's encouraging that methane has risen to a level where we are featuring it, where we are talking about it. It's a notable change from a few years ago. It is the first step that we should be seeing companies go through when they are pivoting their business. They are planning for an energy transition, that they could still do things today that are meaningful to not only potentially their bottom line, but also to the climate. And this is, as you noted, one of the most effective sources of greenhouse gas emissions that we can tackle and do so. So, we have to do it. We just have a lot of work ahead to make that happen.
Great, thank you so much, Greg. And I'd like to come back later in this conversation to understand your perspectives on how we plug some of those gaps. But before that, Mark, I'd like to turn to you now to reflect on some of Greg's comments. Capterra is an interesting company doing projects and satellite data for methane leakage. So I'd like to bring you in here for your perspectives. I wondered if you could reflect on some of the announcements we've seen here. Obviously, we have the Decarbonisation Charter. We've seen the World Banking funds for methane. What are your thoughts? Are these sufficient to drive the change we need? And what else is needed from your perspective?
Thank you, and thank you for being invited to this panel. I think the two initiatives that we've seen this week are actually quite exciting. The World Bank Fund for methane and flaring, and secondly, of course, the Oil and Gas Decarbonisation Charter. And it is a good first step. It's a good first step, particularly with the Charter, because we've now got 29 national oil companies, none of which who had any kind of climate pledges to engage, and that's fantastic. But is it sufficient? Of course, the answer is no, and let me just sort of outline a bit more on that. Firstly, on the financing side, the $255 million is a good contribution, but it's about 0.25% of what we actually need to solve the problem by 2030. So, it's a drop in the bucket. It's a very important drop because we need to catalyze and we need to incentivize the private sector to crowd in. And then in terms of the actual commitments from the Decarbonisation Alliance, they are ambitious commitments. We need to make sure they get delivered. And unfortunately, the track record is not great here. We've had 10 plus years of a zero routine flaring program, and we haven't actually made a significant dent in zero routine flaring. We need to make a 50 times step up in the rate to deliver this by 2030. So what we need to do that is we need, of course, independent data so that we know where the challenges are and how we can hold companies and countries to account. But linking it back to the finance thing, I'd just like to reflect on 3 issues that I think are fundamental. When I speak to potential financiers, they tell me, number one, this is great, but it's fossils. We don't want to invest in fossils, so we've got to somehow get over this mindset that that $100 billion does need to be spent in fossils, and no, it's not locking in hydrocarbons. Otherwise, if we don't make those investments, we will not make the change. The second thing I hear is, a lot of the opportunities are in risky countries, so we need to find ways, and the World Bank Fund is here, to help to reduce the cost of capital so that we can crowd in the financing. And the third thing, and I'm sure we'll come back to this, is I hear that there's not enough shovel-ready projects. Something that actually got mentioned by JP Morgan at the Atlantic Council Forum yesterday. In other words, when there are financeable projects, that's great, we can finance them, but there are not enough projects being taken through technical and commercial maturity to get to that stage. And that, again, is where we need financing to unlock the project development work, which requires significant technical and commercial funding to mature it. But to step back, it's a good first step. We should not underestimate the statecraft involved in getting these signatories to the table, but there's a lot more to do.
Great, thank you, Mark. So, John, I'd like to turn to you here. So, reflecting on what Mark was saying, we've seen some financing coming forward. That's excellent, but it's only a fraction of what we need to deliver this. So, I guess from your perspective here, what is the role of the private sector financing in helping to unlock some of this financing? And also, could you talk a little bit about what you're doing in this space and how you're reflecting on the announcements you've seen at COP? Is this going to help support with unlocking some of that financing?
Great, big questions there. Thanks for including me in the discussion. I'm keen to learn, but happy to share what we're seeing at RBC. And most of my reflections will be on our experience in advanced economies, largely in Canada and the US. We take a client-focused approach, and happy to talk more if you're interested in our new client engagement framework, which we just rolled out 2 weeks ago through capital markets, which allows and articulates how we will engage with clients, largely heavy emitters, including gas producers, on their strategies. And this is, we think, amongst the most advanced in North America, and certainly the most advanced in Canada for a bank, and allows us to sit down now with clients and have serious conversations about the serious commitments that they're making, and then that will lead to further conversations over the years as to our banking relationship. But their emissions become our emissions through reporting, so we have a strong interest not only in understanding what the commitments are, but in documenting the progress that is being made, and how then we are held to account through groups like the Net Zero Banking Alliance, the NZBA, as we call it. So on methane, and I'm gonna pronounce it methane. I know that's a point of debate in some circles, but on methane, it's an interesting challenge in Canada. We just announced new regulations to bring methane emissions down by 75% by 2030. There was immediate and very strong opposition from the government of Alberta on this, and this will likely be contested in maybe the formal courts, but certainly in the court of public opinion as to how ambitious we can be as a country. From a bank's perspective, and we see this in different sectors, a lot of the easy progress, it wasn't easy, so I use that word lightly, has already been made. Canadian producers are among the most sophisticated in the world in terms of methane abatement and management. They've done a lot of work there. The next stage that they're going to have to do is going to be more challenging, i.e. more costly. The initial stage, I think, was done partly for profitability reasons. It was a smart business practice as well as smart climate practice. The cost of that becomes more difficult as you get closer to 100%. The last deciles of emissions reduction tend to be costlier and more challenging. We're seeing in all sectors. So the economic model for methane reduction, certainly in the North American context, is going to be challenging. It may not be commercially viable. Now, if there's a regulatory stick, you have to comply to that as a cost of doing business, cost of compliance. But there may need to be other incentives, whether it's subsidies or in a carbon market kind of setup. So we're interested in hearing from our clients about how they are looking to finance the next stage of emissions reduction, and then what would be the role of bank finance in that, and we can probably talk about the stacking of finance for emissions reduction.
Great, thanks, John. So Greg, I'd like to come back to you here to get your thoughts a little bit on what Mark was saying on in terms of how is it that the private sector is seeing the financing of methane-related projects? Do you see the similar challenges around it being associated with fossil fuels? And also, what are the types of financing that the private sector as it stands can help with? And will this COP be able to overcome some of those barriers?
So I think there's a major step that we have to make. But even in the event we can't, not all hope is lost. What the step is that we can create a process where it's not either or, but yes and more. And for that, we can make progress, and we need to educate and have a conversation about that as a good step. Now, there are going to be asset allocators who will never buy into that. That's okay. There are also asset allocators that don't care. And the idea or the thing we really need to do is when you think about insurance companies, you think about pension plans, they have long liabilities. They are planning their portfolios for a world that is going to change. They need to build resiliency into it. They need to, in many places, they have mandates to decarbonize. It is not divest. It is about the path traveled. And methane reduction is the ideal step for them to take because it is quantifiable, it is actionable, it has immediate results, and it moves them. And they are massive sources of capital. So I think probably the most important people to have at the table are those two asset holders or asset allocators. And they determine a lot about what we can do. As PIMCO, who is an asset manager, we are working in collaboration with them. And we need clients who want to do these things, and they do. So figuring out ways in which we can provide either equity or fixed income solutions that will meet their needs on the path that they're traveling, which has a few things that are important. One, it does need to be commercially viable, because without that, it's inherently a non-starter. Two, I do think it needs to have the quality and the clarity that makes it so that they can feel confident that we are going on that path. So once you have those conditions in place, once you have taken these large asset allocation balance sheets and put them to work, I think you can really make a difference. Now, the structures that is can be very different depending on the asset allocator. It can be bank loan. It could be bank loan types. It can be traditional fixed income. It could be a labeled bond even. It just has to be thought through in conjunction with the ultimate investor in mind. Because the reality is RBC, JP Morgan, as you mentioned, will respond to the client needs. They will find these solutions once it is clearly laid out in front of them. And I do think there's a lot of companies for which many have met this weekend, or this week. What day is it? I don't know. And I'm sure most of you all can agree on that, that they want to have the parties, and they want to have that clearly stated so that they know the parameters to operate within. So that's how I think we can start moving the needle more aggressive and get the private sector involved.
Great, thank you, Greg. Mark, could I bring you back in here to reflect on some of these comments? In terms of the gaps that we're seeing from a policy standpoint that's going to help the private sector to respond to the requirements, what policy progress do you see that has been made already to plug some of these gaps, and what else would you like to see? And also, are there any leaders that you could speak to, country leaders, where we're already seeing some of this organised activity taking place?
Yes, thank you. The first thing to note is the sheer scale of this opportunity is very large. Just to put some numbers on it, it's 260 billion cubic meters of gas that's flared, vented and leaked, $70 billion of potential revenue, and up to 6.7 billion CO2 equivalent tons. So it's a really large opportunity. And then if we look at the span of performance by country, it's worth highlighting Norway is off the charts excellent, and about 200 times better on methane intensity than, for example, Turkmenistan or Venezuela. And what's led Norway to be so good is excellent policy backed by a firm regulator with financial penalties since 1971. So, it's policy that drives good practice. But there's been lots of really good stuff in the last year or two. And of course, I could talk about the Nigerian government having the first African methane policy that's come out. I could talk about the good work you've talked about in Canada or the IRA. What I'm also really excited about is the EU's announcement a couple of weeks ago, so the methane performance standard. And what this does, it really shines a light on the need to move fast. For example, if you're supplying gas or oil into Europe, you will have to pay a significant penalty to access that market. So rather than pay that penalty, let's use this incentive to actually make those investments at home. And what's really interesting, compared to, for example, the North American market, is the North African market is full of very large opportunities, of very large flares, vents and leaks. And our analysis shows that on average, 70% of them in North Africa are within 20 kilometers of an existing gas pipeline. So, they're not as stranded as we think. And what it really takes is it takes leadership to really seize the opportunity and to move away from flaring as a problem we'd rather deny, and methane is a problem we'd rather deny, to flaring and methane is an opportunity for us to make real progress. By the way, capture more gas, sell more molecules, decarbonize, generate revenue, and help to accelerate the transition. So we need leadership, absolutely, to be backing in that policy. But there's so much opportunity. There are plenty of good examples of good practice, and I would also highlight, for example, Egypt for making some good progress on flare reduction. Also Iraq recently, with some very interesting gas to pipeline or gas to power projects. And these examples show us what can be done. It shows the scale of the opportunity and shows that if we get the structures right, the commercial incentives actually can mobilize action as well.
Great, thank you so much, Mark. So I'd like to turn now back to Mark, to John. In terms of the, Mark is saying that we're seeing that financing methane is good practice and there is commercial use case for doing so. Is this something that, I know you mentioned a lot of the low-hanging fruit had already been captured in Canada. Is this something that you're already seeing with clients that you're able to deliver that financing? And then also I wondered, what is the next step to your mind to seeing this happen at scale? You mentioned that the projects that have already taken place capture a lot of those easy first wins, but in terms of the scale, what is it that's going to be required from your side to unlock this as system-wide best practice?
So it's a fascinating area and interesting to compare and contrast it to other abatement efforts, carbon capture we may talk about, which requires heavy capital amounts and is fairly concentrated, certainly in the Canadian context. So we look at that through one lens. Methane finance is fairly different. It often is run out of general purpose revenues, so it's just part of our facility. We don't even know how to describe that perhaps in our marketing, and that's something we're working on through a taxonomy. We're hoping to have a Canadian taxonomy out maybe next year on which will be not hugely dissimilar from the EU taxonomy, but will try to recognize the particularities of the North American market. I don't think we'll see an American taxonomy anytime soon, but it will reflect the nature of, certainly, of energy production as well as capital markets in North America. But if it's being financed out of sort of general operations, that's a different conversation for us as a bank. We still, as I said, through our client engagement framework, will have regular sit-downs with clients to understand first of all, what their commitments are, and then secondly, what their strategies are, and then the plans to execute on those strategies. The whole sector, the finance sector, and remember, this is early days in all of this. We weren't even thinking about this a couple of years ago. The sector needs to come up with approaches, I might suggest even collective approaches, to verifying different approaches, because it's not on RBC or JP Morgan to say, company X, your methane strategy is okay. We're all signed off on it. So who is going to do that for us? The companies can't self-report, so we will need to be working with client groups on that, as well as through the finance sector. But we're not looking at significant amounts of new capital allocation, let's say, to methane management. We think it would be largely on the capital draw of the sector. That's going to depend on the viability of the sector. So gas prices, for instance, are going to drive a lot of behavior. If there's strong gas demand, if prices are high, then companies will be more incented probably to invest in this, particularly if there is a market advantage there. And maybe that's the last point I'll wrap up on, is how do we ensure that companies do have that market advantage, particularly in the export market, to say that this is methane-free or methane-friendly exports. Probably the EU would lead the way on that. But and this is where COP can play a role, how can the buyers of the world start to provide that recognition and ultimately authentication of a product that companies will then compete for, maybe even drive a premium for in the market, and then the economics become more attractive.
Great, thank you, John. Mark, I wonder if I could bring you back in here on a few things. One, the talk of this fossil fuel financing. Do you think that with this COP28 and this organized activity that we've seen, it's going to help to overcome some of that for the financiers? And what else can be done to help drive some of that action? And then also, if you could speak to the sectoral approaches that we're seeing where the industry is organizing itself to come forward with some of commitments. Do you think that this is a good first step in how we can get the sector to organize itself to take forward more of the transition activities that we need to see and push for those policy gaps and regulations?
Yes, I think it is good that we're seeing increased sort of collaboration and organization within the fossil fuel industry, absolutely. And I think, sharing best practices, getting transparency, and highlighting what good looks like and showcasing successes is very important. To your first question, will COP help to solve this problem? Yes, I hope so. I hope we'll see that there's greater understanding and recognition of the importance of making this quick win lever actually deliver. But we still do fundamentally need to make these investments. So I hope that we can find the right language, find the right terminology, so that we don't see necessarily investing in methane or solving flaring as a perpetuating fossil fuel industry, but we see it as a decarbonization option that compares to CCS or compares to DAC or hydrogen or anything else. I think if we put it on a level playing field and we see it for the opportunity it is, then we're most likely to make the actual progress we need.
Yeah, absolutely. Thank you, Mark. And I think Greg wants to come in here.
Yeah, I think the point you made before about what Europe is attempting to do is the simplest, most direct, most effective way of ushering in this investment. That is, make the explicit methane emissions or carbon have a direct cost. it's politically unpalatable is the big problem. And Europe doing this on its own is less effective because in a market where goods are globally tradable, you have a reordering of trade to accommodate the methane intensity, which will reduce their overall effectiveness because it doesn't mean that the supply lines have to stay static. So your supplier doesn't have to reduce. Someone else could replace, and then you sell elsewhere. So one easy way is to think about methane club or some broader definition, broader regions, bringing in that buyer base that you had mentioned instead of being on a corporate level, be on transnational levels. And the bigger the region, the bigger the groups that are willing to do that action, which granted, we have to talk about World Trade Organization and different issues that come up with these ideas of border adjustment mechanisms, because can't call them taxes, that you have more effectiveness the bigger, the broader it is. So when you look at it from an NOC or any producer, and all of a sudden you have a genuine cost of not improving your activity, the policy is simple. You have the economic incentives in place, then all of a sudden investors can earn a genuine commercially return on their investment. Problem is, this is a very good idea that's very hard to compete. And unless people are told that there's an explicit cost to doing this, it creates some bad negative externalities politically for doing so. So unfortunately, we're talking a lot about solutions that in many respects try to circumvent the direct pricing of that negative externality of releasing the methane to individuals.
Can I just add something there? Because actually what's really interesting is that many of the polluting countries with the largest methane problems do actually have strict regulation with quite punitive policies. The issue is, so take Nigeria or Algeria, their carbon tax equivalent on flaring is $40 to $50 per ton, not that far behind Norway. The issue is about regulation, not regulators not enforcing it, and this comes to the data piece. We need transparent data to be able to track performance and to be able to make the right penalties matter. And the amazing thing is we do, to a large extent, have this today. In the flaring world, we've got very good satellite tracking of every single flare every day. We just need regulators to use the data and to use it to enforce. And there's growing availability of data, of course, in the methane space, with many number of both private and public satellites that are increasingly tracking it. So, we have some of the tools today. We just need regulators to actually bite the bullet and to some extent do the job that they're already empowered by legislation to do.
Yeah, great. Thank you, Mark. Greg, I wondered if I could get you to comment on these remarks in terms of, do you think that the private sector financing can help to support with, if we know that there's these penalties in place and we know these regulations are in place and there is challenges with the enforcing of that, is there a role for private sector financing in terms of knowing that this is what the regulators are saying? Can the private sector help to drive some of that action through enabling some of these financing structures to the industries that need it in order to unlock more projects?
It's an interesting question. I think the question is if there's a negative enforcement of regulations, can private markets step in and be the enforcer? I think where that probably comes down into is when you start looking at investing alongside those companies, you start shrinking the amount of investor base that is interested in being invested in a company that is not meeting the commitments, is violating the regulations. Like the rule of law and is important in terms of, and then whether or not, and if they're not being applied, then the companies that are in violation, provided we have the data to verify it, should ultimately end up with a higher cost of capital as a result. So beyond that, and investors engaging with these companies and explaining the importance and being a partner in the process, I don't know if we can take the place for the national or regional governments otherwise.
Yeah, yeah. I think as well, in terms of the agreement, the other thing I wanted to ask you on is in terms of the agreement, are we fighting fossil fuels or are we fighting emissions, and what financing is available for those? Do you have thoughts on where the private sector and where clients are in terms of where they land on that? And with this COP, are we helping to, same question that I really asked to Mark, are we really pushing forward and making progress on some of that what we've seen at this COP?
I think the simplest thing in that regard is to have like asset or purpose-specific fixed income instruments, which can be distinguished from the general corporate. Now, you can always ask the question of, does that provide more money for other activities that aren't meeting that? Like there are questions that do come up, but we don't. Sometimes you just need to go forward. You need to say that this is a better option than not having done it, and hopefully the direction of movement leads to the inertia being broken and better practices and better activity. If more and more companies see that other companies are able to raise financing at cheaper rates and or just simply more for good behavior and good actions, then hopefully that will crowd in others to follow. So I think that's the hope that one would have to be able to really move the needle more, is to be able to maybe just make it specific enough so that investors can get over their general concerns of supporting fossil fuels, and instead could say, we are supporting the reduction of methane emissions. We are creating an efficient outcome through our money and our investment.
Yeah. John, I wondered if you could also comment on the same in terms of with this COP, are we going to see that perception changing, and do we have what we need for financing these projects? We've seen these announcements, but have the announcements going to lead to unlocking that financing now? Or if not, what are some of the gaps? You mentioned there are regulatory and policy gaps, but in terms of perception gaps and sharing of those, what do you think is needed in order to start seeing progress between now and next COP?
So incentives generally work better than exclusions, probably in most areas of life, but I would suggest that tends to be true in finance. And we're looking at developing, call them incentives, ways to recognize positive work by our clients in emissions reduction. So I mentioned the Canadian taxonomy. We're wrestling with, particularly on natural gas, the definition of transition gas. So there'll be green, that's fairly easy to define, transition, everything else. The transition definitions, particularly for gas, is a real debating point in Canada. That's been the hardest part of our work over the last couple of years. But we think we can get there to be able to define gas by a number of metrics as transition. And emissions performance is a critical metric there. So that becomes an incentive for clients, for issuers to be able to say, they can still raise lots of capital outside of the transition definition, but they might get a premium in capital markets as a transition instrument because presumably there'd be demand from a number of portfolio managers for that. And if we have a clear, credible taxonomy, then that becomes the reference point for all people who are concerned on that. It's not companies calling themselves transition or us as a bank using it as a marketing tool. There's a clear definition of what transition gas is, and that is largely interoperable with other taxonomies around the world. That becomes an incentive. That's our hope, but there's good evidence of that. Encouragement for clients to try to meet those standards and then be able to get that premium in their financing.
Yeah, thank you, John. Mark, I wondered, you mentioned that we've seen some good policy practices that are going to help make progress on methane and unlock some of these projects, further projects. I wondered if you could speak a little bit about other decarbonisation technologies, and has the policy progress that we've seen on methane, how is that going to help with transition and other technologies that can be applied to the global market and how it can decarbonise and drive for some of these other technologies? You mentioned carbon and other energy transition technologies we need to see.
Yes, your question is making me think of an excellent discussion that I participated in with the UK's North Sea Transition Authority a couple of weeks ago. They are driving very hard to decarbonise the UK sector, and they have flaring and methane right up there, but they also have decarbonisation of offshore of power as a really key initiative. So that's the first sort of synergy between the renewable world and the fossil world is let's decarbonize Scope 2 emissions, let's displace the burning of diesel, often in the desert, with generation from solar, with battery backup if required, for example. So, but there are many other technologies, and it's an extremely exciting space that we should be watching very closely.
Great. Sorry,
yes.
do you want to come in?
I was just going to say, the one hope is that if we work hard and get this right on methane, that we could create the frameworks to move onto other opportunities, even ones that are more challenging. The better we do in putting our heads and work on this today, it's timely to do by itself, but hopefully we can create proper models to do more. Because while this is a great first step, the broader trend of decarbonization has to continue, and we could do it better if we do this right.
Yeah, absolutely. So I think we're going to have to draw to a close now, but I'm going to try and do my best to summarize and capture some of this conversation. So we need to work with both the policy and regulatory environment. We've seen some fantastic policy coming through with this COP20 with the World Bank Fund and Charter, and sufficient funding coming through from NOCs and IOCs. But we need to crowd in private sector financing in order to deliver this and unlock data and transparency. We need to work with the industry as well as with the public sector to deliver that data so that we have accurate reporting and begin to develop those standards. There is best practices that we're seeing. Norway calls out as a champion, so how do we share some of the learnings from countries and governments where we are seeing action on methane and apply those best practices globally? EU has had big announcements around methane with this COP, and also some opportunities from Egypt and Iraq who have made some good progress on methane reduction. And if we can use the sector activity and use this as an organizing principle to pick that low-hanging fruit and unlock the financing for methane, it can set the premise for what we build towards on some of the more challenging options. So I don't think I captured everything that was said, but thank you so much for joining us for this panel, and I think we can draw that to a close. Thank you.